Yep. Hey guys, welcome to Bitcoin Treasury seminar online. So here we will discuss about Bitcoin and Bitcoin treasuries. So today's session will be focused more on Bitcoin and not on treasuries. Basically, this is the part why corporates are buying Bitcoin in their balance sheet and why should they buy. What's the reason behind buying Bitcoin in the balance sheet? As your personal balance sheet as well. So why you should not, or why you should consider Bitcoin as an asset in your balance sheet. So this will be a session for both individuals, corporates, and basically anyone who is looking to buy Bitcoin and invest in Bitcoin. So this is inspired by Michael Saylor. Basically inspired by Michael Saylor, and this whole session is inspired by Michael Saylor and Anil Patel. So Anil Patel wrote the book from Saylor's talks, which have happened throughout in the past in Amsterdam, in various Bitcoin conferences, on various Bitcoin podcasts. How does Saylor think and all? So yeah, Bitcoin is the apex asset. If you want to compare any asset with Bitcoin, uh, Bitcoin has so far been the apex asset by any margin. Like if you want to measure it via returns, or if you want to measure it via the qualities of an asset. So going forward, I will go through qualities and risks of a particular asset, and then we will compare why Bitcoin is better asset. So a long duration non-sovereign digitally scarce capital asset. This is what Saylor calls it. Yeah. So this chart is basically my favorite chart, wherein I know this is little small, but yeah, I will consider it like I will enlarge it for the main session going forward in Goa. So this is how the world's wealth looks. Total world's wealth is 1,000 trillion as of now. When Jesse Myers has updated this chart, I think this chart has been updated in 2024. So before he has updated, before when first time when he came out with this tree chart was at that point in time, total global asset value was 900 trillion, and from that point in time, the asset value has inflated to 1,000 trillion. So let me just run you through like how much of capital sits in different pools of buckets. So Bitcoin is really small here, sitting around 2 to 3 trillion. Gold is around, maybe now it's much more, like 30 trillion. Art, cars, collectibles. So this is 27 trillion. Equities is 135 trillion. Bonds is around 318 or 320 trillion. Money, like uh, US dollar, Chinese yen, Chinese renminbi, Japanese yen, British pounds. So this is around 129 trillion, and real estate is around 370 trillion. So as of now, approximately there is around 1,000 trillion or probably more of total global wealth which exists. Now, here's an interesting part wherein uh, most of the most of the people are like compulsorily, like they are obligatorily investing in these different pools of assets like equities, bonds, money, or gold. So this is happening because of inflation. So if you want to beat inflation, then you have to invest your money uh, into any asset. So this is basically how Saifuddin Ammous says, like In a fiat world, you are doing two jobs. First is to earn money, and second is to like store your like do your wealth preservation. So these are your two jobs in a fiat world. But in Bitcoin world, what is our focus is to only earn money, and everything which we say goes to Bitcoin. And like highly sophisticated investors, if they want, they can go out and invest in equities or real estate or bonds and anything. Uh, I mean, really bonds, I don't think, but there are like some preferred stocks out there of some companies where some people might put some money for their basically if you are running your expenses, monthly expenses, that part you have in fiat cash, then you can store that money in some of the preferred instruments out there and get some yield. So, this is what the global wealth chart looks. And the thing about this is approximately half of the total global wealth is monetary premium here, and half is utility value. So basically, if a rich person is investing in real estate, like if a rich person has 10 houses, he is probably using two, and rest 8 are like just as an investment. So this is making a second order problem for new home buyers, because investor is investing, basically he is basically, if he doesn't invest, let's say he doesn't know Bitcoin, then the only way out he has is real estate. So there is a thing in the book uh, wherein Anil makes a point where if you see a person who is rich in 40s, 50s, or 60s, probably he has made money by investing into real estate. Most probably. Equities is also a part, but most probably, if you see in your surroundings, the definition of a rich person is by how much real estate he owns. So this is the thing. So what is the why I'm discussing this chart here is because I think the monetary value or the capital preservation which people are doing by investing in this different types of capital assets will flow into Bitcoin directly or indirectly. So like how will this flow and why will this flow, this we will see into the further slides. And yeah, Bitcoin is basically a perfect digital capital. um, so that's the reason why that makes sense to like suck out the monetary premium which real estate, bonds, equities have. And let me give you an example of monetary premium versus utility value. So let's say a house costs 1 million dollars. That house has an utility of maybe 500K, but house has a like price of 1 million. So this extra 500K is basically monetary premium, which is because like only rich guys have invested in these properties, and that's the reason why the like it's basically artificial demand there. So what Anil has made a point, or what Michael Saylor makes a point, Bitcoin has all the properties through which it can out the monetary premium from these asset classes. So I have one example wherein like I visited Lugano in July. So therein there's a lake called Lugano Lake, and surrounding to that lake there are some like houses or properties. So most of that properties are empty, like they are invested by rich guys, but nobody lives there. So this is how real estate is as of now. So this is artificially inflating the price of real estate. Same case is with equities. So in the US, approximately 60 to 70% of US households invest in equities, and that's the reason why like they invest in these indexes, S&P 500, Nasdaq 100, or they directly invest in Mag 7 stocks, and that's the reason why they trade at crazily high P multiples. So this is also the reason why equity is also in a monetary premium kind of a thing. So today there was a very good tweet made by Joe Burnett where he was explaining why in the today's world, why are the like people are forced to invest in a cash flowing entity to preserve their capital. And I mean, if everyone is investing in a cash flowing entity, that cash flowing entity is trading at a monetary premium. So this should not be the case. Like there will be equity investing still in the Bitcoin standard as well, but there will be optionality for you. So if you want, then you can, but you are not like forced to. So basically, whoever is not investing in equities, real estate, or any kind of asset like gold, he is losing value. So to prevent your value leak or to preserve your wealth, in today's world, you have to invest in one of these categories of capital assets. So because everyone is investing in these capital assets are trading at monetary premium. They are trading at a higher multiple to which they should trade. So there's a book by Benjamin Graham called Intelligent Investor, wherein he makes a point where 30 PE is basically okay, like fairly valued, and anything below is, I mean, 20 to 30 is fair, and below 20, this is highly generalized. Like you can't just go out and screen stocks below 20. This is a highly generalized statement, but 20 to 30 P is like fairly valued. Below 20 is like undervalued, and over 40 is um, like it's highly overvalued. So if you go out and look current situation of equities market, you will hardly see equities trading at these levels of fairly valued or underly valued levels. Most of the like good equities, they trade at around 60, 70, 80, or there are also companies which trades around 100, 200 Ps. So this is happening because everyone is investing in equities and they are trading at a monetary premium. So now let me just go into what makes an asset good, or basically Sailor explains it like this: asset lifespan. What is lifespan? Lifespan is like so this is a kind of like I studied this in 12th standard, if I am not wrong. There is like in physics or chemistry, I am forgetting this thing, but uh, basically there's this thing uranium, or these radioactive elements, wherein we have to calculate this half life of that element. So that element disassociates every second, and that has a specific half life. So basically, what is half life? Half life is basically, let's say you have 100 grams of uranium, and after X years it becomes 50 grams. So that's what half life is. So in our case, What is an asset's lifespan? So basically, useful life of stored wealth. So, like for what amount of time a particular asset can store your wealth, and V is value of the asset, and M is basically annual maintenance slash decay or any inflation happening in that asset. So if we take an example or like consider here in this case, financial assets leak economic energy. So they are like there is a maintenance or there is inflation happening or there is a decay. Like in case of property, there is a maintenance, there is also a decay. Decay is in the form of fees, taxes, dilution, and upkeep costs. So if you consider real estate, you have to keep your property nice and well maintained. Let's say you invest in gold. Gold has dilution of 2% per year historically. Also, there are taxes in gold and real estate as well, and there is fees if you invest in mutual funds. So there's a fees called as I mean expense ratio, wherein you have to pay point something or 2 to 5% fees to your mutual fund manager or the asset management house. So this is how we calculate basically the asset lifespan by like L equals to V by M, total value of your asset divided by the annual DKM. So generally, most of these assets leak economic energy. So like inflation, basically because of inflation, these assets leak energy. For example, let's say you have 100 rupee note, and let's go into government data and government CPI. As of now, I think we are at 4 to 6% inflation in India. So you are getting like the whole thing is being increased by 4% to 6% every year. So you are getting diluted or you are getting debased. So that's how inflation is destroying your value. And there are some negative real yields are like Fineng took a session maybe a couple of sessions back, wherein he explained like in Switzerland there are negative real interest rates to keep your money in the bank. Why the interest rates are negative? Basically, he explained it very nicely. Like, let's say if you have some $1,000, then you are okay to keep it at home. But let's say if you have millions or a couple of $1 million, would you keep that amount in your home? No, most probably not. So that's the reason why in some European nations there are negative real yields. Frictions. So there's a friction when you transfer or sell a particular asset, and these frictions are tariffs, transfer fees, taxes, litigations, obsolescence, and politics. So even politics is considered as a friction because in the book there's a specific case given like basically uh, there is also a uh, political thing wherein which you have to consider if you are invested in a particular asset. So there's an example of Michael Saylor wherein his company strategy had some millions of Argentinian pesos in Argentina. And something bad happened in Argentinian economy, basically hyperinflation, and Argentinian government froze the bank accounts of these companies. And after freezing, they diluted the supply by I think 98 or more than that. So this basically left the purchasing power was like only left 1 to 2%. So these are political risks as well. So These are like the risks when you invest in financial assets or also physical assets like real estate or gold. Gold also has like storage costs. So let's say if you have some gold in tons, so you most probably won't keep that gold in your home. Most probably, many of you guys, even if you don't have gold in tons, you still are keeping in the bank lockers. Um, so that has a cost. That bank locker has a cost to basically to store your gold safely. So this is also a part wherein these assets leak economic energy. So typical financial asset lifespan is 30 years before decay dominates. So what is this 30 years? 30 years is basically a half-life. So basically, let's say you invest in gold or you invest in a particular equity. Uh, After 30 years, you still have 50% of like your wealth preserved in an asset. So physical assets are better, but they are still leaky. So if you compare cars, they have heavy upkeep, cars slash yachts. So they have upkeep, they have depreciation, they have storage costs. Real estate, they have property taxes, insurance, maintenance, and jurisdiction risk is also there. Gold and silver, again, storage, insurance, authentication, mobility limits, divisibility limits. So these assets also leak. So I think 6 months or a year back, our RBI is consistently bringing back our gold from the uh, the basically from UK uh, from UK's gold vault, and they are bringing it back in our home country. So bringing that 100 tons of gold back has a cost. Like there might be security given to that ship. Our military might have gone to like some kind of protection might be given to that ship. So our navy might be doing something. So this is how like things have costs in physical assets. Like practically, like store of value of a lifespan in gold or some best physical assets in maybe Manhattan or Miami is most probably 50 to 75 years. So here you can see physical assets comparison chart wherein um, basically here we compare like these are the traits wherein what makes an asset good. So higher the better. Maintenance cost 100, it means that like maintenance is least. So compared to real estate or gold and silver, cars and yachts are like they have to be maintained less. Storage cost, same way. Liquidity, I think gold has more liquidity and than cars and real estate. Divisibility. So all these things. So this is how this chart works. So if you can see here, lifespan of gold and silver is highest. So this is a scale from 0 to 100. So when this says here 80, this doesn't mean 80 years. This means like this is a scale based on these other assets. So according to that, gold is much better asset compared to these other two, real estate and uh, what we can say, cars and yachts. So, as we were discussing, gold is most probably the least bad commodity or the second best commodity out there in the market, but still, it has a 2% per year supply inflation. Then it has costs like there's a cost to store. Also, there are some friction points wherein how do you verify, like how do you authenticate that this gold is 24 karat? how do you authenticate that this is real gold? Like there have been cases wherein um, on the outer side it's gold, but when you open it, there's tungsten in the wrapped by gold sheet. So, like authentication and verifiability is uh, not really great in gold. Also, transport is very hard of gold. Security, like high cost of security, distribution. So this is also very tough for gold. Poor velocity. Gold's velocity is like very slow. So if you want to settle transaction in gold, it will take maybe months or weeks. Poor divisibility. So gold also has this divisibility concern wherein if you go out and buy some things with gold, most probably you won't probably will be able to buy because of poor divisibility. Like let's say you have a bar of 10 gram of gold, but you want to buy a thing of uh, let's say 1,000 rupees. How are you going to, like, you can't just go and cut it with knife or do something like that. So there are also structural risks in the gold ecosystem. So if you are depositing gold in the bank locker, there is counterparty risk. Also, there is confiscation risk if you are uh, investing in gold, like or if you have gold. Also, like there are not many products which can be built over and above gold as compared to Bitcoin. So Bitcoin we have Lightning Network and we have some I think RGB assets are also there. So we have some assets on top of Bitcoin, but gold lacks it. So till now, gold is most probably the second best or maybe the least bad commodity out there, which preserves their value like 50% of their value till 35 years. Now um, let's go compare it with Bitcoin. So when you compare this thing with Bitcoin, is like gold has 2% dilution, low mobility, low divisibility, high custody risk. Real estate is like immobile, taxed, jurisdictional risk is also there, and indexes and bonds. So there are issuer risks, policy risks, currency linked risks, and inflation sensitive. So they are highly inflation sensitive. So um, I mean their prices change according to the inflation as well. And now compare this thing with Bitcoin. So Bitcoin has a hard cap of 21 million. Um, it's global, it's instant, it's permissionless, it's verifiable. I mean, most of you like think Bitcoin. Most of the newbies think Bitcoin, like buying one Bitcoin, is really hard. But the fact is that Bitcoin is divided into 100 million satoshis. So you can literally buy 100 or 200 worth rupees of Bitcoin as well. Um, Bitcoin can be Bitcoin is the best bearer asset out there. Like even if you die, you can die with Bitcoin with you, like taking Bitcoin with you. So this is the only property with Bitcoin as compared to any other asset. So let's say in medieval periods, maybe India has been attacked by some Turkish invaders or invaders outside India. So there, most probably they might kill you and take away your gold. But in case of Bitcoin, let's say we had Bitcoin in medieval periods, and you know these 12 words in your head. Now, most probably, like maybe there's an optionality, like you have an option to stay alive and give your Bitcoin to that invader, but you also have the option to die. So I mean, let's say, for an example, most of you might have watched this movie Chava, wherein Sambhaji Maharaj denied the asks of Aurangzeb, and he died. Basically, he denied all the things which Aurangzeb asked, and he died. He denied conversion and all. But if you imagine Bitcoin there, uh, you can die taking Bitcoin with you, and the invader most probably won't have Bitcoin with like most probably do not have will not have an incentive to kill you if most of the people do it like that. So this is one thing with Bitcoin. Like you can choose to take Bitcoin with yourself, and this will be beneficial for other Bitcoin holders because that supply is getting lost. So here is one more chart wherein where you can judge like supply certainty, mobility, divisibility, custody security, and proven lifespan. So for Bitcoin, it's just 15 years, 15 or 16 years. So this is only the point wherein Bitcoin is lacking, but all other things, Bitcoin has a upper edge. Like supply certainty, it has only 21 million. It's highly mobile. It can be transferred like within 10 minutes. It's highly divisible. Custody doesn't like custody does not cost you much. Basically, the maintenance. If we go back to this L equals to V by M, so this M annual maintenance is negligible in case of Bitcoin, and that's the reason why we have longer lifespan of Bitcoin to preserve our wealth. Now, let me compare real estate. What are the defects in real estate out there in the market? So before going to this second part, I think I should take a pause here, and maybe if there's a doubt, uh, we can take that. So I think there is no doubt so far. So yeah, let me continue with the session. Um, Real estate defects. So, what are like defects or maybe negative sides of real estate or investing into real estate? So, real estate has a finite life. So, basically, if you are investing in a building, that building has a finite life. So, that building might for stay in good condition for maybe 40, 50, 60, or 70 years. So this is finite life which real estate has. Real estate is destructible, like it can be destroyed by some political or maybe some forces uh, which don't like you or your property. Real estate has maintenance. So if you want to keep your real estate in like in the top condition, then you have to maintain that real estate properly. So real estate also comes with insurance costs. Like what if fire is there in your real estate? Then what you will do? Then you most probably have an insurance. Then it's fine. So this is also like decaying your costs of holding that particular asset. Now there is also property tax which you have to pay annually, like holding tax. So this is crazy with real estate. Utility trends. So coarse rental, limited subdivisibility. So real estate cannot be very easily subdivided. It is very hard to transform. It is very hard to upgrade. Mobility issues. It's immobile. Like real estate can't move in a like from a country to other or from a city to other or from a particular area to other. Uh, which in case of Bitcoin is like it can move from a particular country to other country in just 10 minutes. So or few minutes. And there are jurisdictional risks in case of real estate. So I was talking to a person from Hong Kong. So therein, people do not really own real estate. They get it on lease for 99 years. So technically, you are not the owner of that real estate. You have got that real estate for a lease of 99 years. Now, the third thing is it's highly costly to transfer real estate. So basically, if you are buying a plot of land or a flat or a building, you have to pay around 8% in taxes. Like uh, if you want to transfer that real estate from a particular person to other person, then you have to pay 8% tax to the government to update that real estate in their ledger. Now, other risks are like visibility. So let's say, for example, your real estate is in a prime area and it's highly visible to uh, everyone. So there's a thing wherein you dislike, like if there's a thing wherein you don't like to show off your wealth, or don't like to basically you want that privacy to in your wealth as well. Like you don't want to show your real estate to everyone out there, or show your property to everyone out there. But this can't be achieved with real estate. It will, like, it is highly visible to anyone out there, which is when you compare it with Bitcoin, um, it's pseudonymous. So people know that you have it, but uh, like uh, I mean, people can't do anything with it. So let's say there are some goons out there, or political goons, or any goons out there, and they are targeting your property. You can't do anything. But in case of cyberspace, basically any goon can't do anything with your uh, Bitcoin. Now, real estate also has confiscation risk because it is lying in a particular jurisdiction. So government can come out in a law and pass a law wherein they can confiscate your real estate, funding constraints, and uh, elastic supply. So these are the problems wherein these are basically defects in real estate which destroy your value or destroy the lifespan. Now, what if we have to design a perfect property? Let's do a thought experiment. If I am owning a warehouse, what are the properties which I would like to have in my property? It should be immortal. Like, I would want that property to be immortal. I would most probably want that property to be indestructible. I would also want that property to be tax free. I would warehouse is in Texas, but I'm getting more rent in California, then I can transfer that property in California. So yeah, that's basically this is a thought experiment which we are doing right now. Like this is not true with real estate, but yeah, this should be private. Private in case this is only available to the people who I chose to, and uh, this is not visible to the people who I want. Infinitely subdivisible. So let's say my warehouse is infinitely subdivisible. For example, in the book, there is very good example given. Let's say in my warehouse, I have some compartments out there, and each compartment, let's say if I have a compartment in California, I am getting a rent of 100K. But if I have that compartment in New York, I will receive 150K. So what I will do is, like, basically according to the need, I will highly managed, wherein I can collect more rent to that property in a particular city or an area. So I will divide my real estate into this thing. So wherever I am getting higher rent, I can move my property there. Digitally upgradable. So as we were discussing in a real estate case wherein real estate is very hard to renovate and upgrade, but this my real estate is digitally upgradable. uh, it is hard capped, so that, like, for example, there are only 100 warehouses or maybe 1,000 warehouses in the US, then the value of my warehouse is much higher as compared to, let's say, there are 100 warehouses every new year they are coming into the supply. So in this case, I would like to have a hard capped supply of my of warehouse. So when you like do this hypothetical thought experiment, you come into this like you start thinking about Bitcoin, because Bitcoin is digital, portable, scarce. It has a 21 million hard capped supply, and it is also programmable. So, if you consider a perfect property, most probably Bitcoin is the perfect property which is lying in a cyberspace, or how Sailor calls it, like Bitcoin is a digital Manhattan. So, this is how Bitcoin is. Now, this was all about real estate. Now let me come to equity. It's 8:47. How much we are left? Okay. So equities, what are the risks in equities? When you invest in equities, you have to focus through these risks, and basically these are the risks when you invest in equities. So there is governance risks. So how is like management or board governing a particular business? There is operational risk. How is management operating a business? There are strategic risks. So, what are the strategies implemented by the management? Are they good or are they bad? Like, these are risks. There is competition risks. So, for a latest example out there in the market, so Geo and BlackRock have launched a mutual fund, FlexiCap mutual fund, which will most probably destroy the current market of Parak FlexiCap and one more mutual fund out there. So if you are a TradFi guy, you might know this Parak mutual fund. This was most probably one of the best mutual fund out there till date. But with Geo and BlackRock's partnership, with BlackRock's expertise, there's I mean, there's a there's a thought going out in the market that they might be turn out to be outperform these flexi cap funds, and also on top of that, the expense ratio of this Geo BlackRock mutual fund is much lesser than Paramпаrik and other flexi cap funds out there. So there is always the competition risk out there. There is tech disruption which is there. So for example, in case of Nokia or in case of Kodak, they they got out of the business because of this technological disruption which happened. Now, these were the business and strategic risks. Now, let's go to external and market risk. So, there is employee risk. Now, what is employee risk? Employee risk is basically, let's say, you as a company are liable for the things or for the wrong things which have been or which might have been done by the employee. So this is the employee risk. Or one more type of employee risk is that employee can, like, uh, leave your company, or um, a good number of employees can leave your company. Now there is vendor risk. Now what is vendor risk? Vendor risk is basically the person or a company from which you are procuring material for. Let's say you are a manufacturing company, and you are procuring cotton from a particular vendor. Then if your vendor is highly, like, you buy 90% of your cotton from a single vendor. Let's say that vendor goes bankrupt, or that vendor just cancels your contract, then your whole business is at risk. So this is a vendor risk when you invest in equities or when you invest in business. There is customer risk. So let's say if your products are highly concentrated in a particular uh, in a particular customer. For example, let's take example of tech companies. So most of the Indian IT giants, they offer they offer services mostly to US and EU clients. But what currently Trump is doing, that is affecting our IT giants. So because most of the part of their services were being provided to these US and EU customers. Reputational risk. So there is also a reputational risk tied around with your business. War risk. So let's say your country goes into war, then it will affect your business as well. There is currency risk. So let's say if you are an IT company in Argentina, then like it will be very hard to manage finances there in Argentina, because inflation is very high there. Tax risk. So as a company, you have to pay taxes, and this is a, like, the government can simply change tax slabs and put you in maybe higher slab or lower slab, which is currently happening with GST.
Hey Digant, we can't hear you. Hello? Hey Digant. Uh, I think there's some network issue, or he might have dropped off. Cool. So Yabar, there's this. I'll send a link for Treasury of MicroStrategy. It's available on the, what's this website called? Free. Gumroad. Yeah, it's available on Gumroad. So yeah, you can check it out here. I've shared the link. It's available for free, so you can download it from Gumroad. I guess we might have lost Digant. So let me uh yeah, let me stop the stream, close the stream, and open floor for any questions, anything, uh any discussions that you might want to have till he joins back. If he joins back, then we can again give him the floor to complete the presentation. Hello? Cool.
Yes, Saurabh, we can hear you.
Yeah, I thought. Perfect. So this was relatively a primer for why Bitcoin is the best asset. Because for a lot of people, we thought, rather than bringing them through a technical understanding of it, it might be a good idea for them to compare how does the Bitcoin stack with real estate, with equities, and with other instruments that people considered buying. So that was the thought process behind it. And yeah, it was a little dense though. For someone who is just coming in, I think this presentation is still a little dense.
Yeah, agreed.
So I had one observation regarding comparison with real estate.
Hmm.
Uh, so when it is compared with real estate, and when we say that it is better asset compared to real estate, uh, does it mean that like when we are buying second or third home, in that way it is better than real estate? But when we are buying our first home, like for personal use, like that is a need that is required by everyone. So it is not that instead of buying your first house, you should live and rent and buy Bitcoin. So that is not the case. Am I correct, Saurabh? What's your thought on that?
Uh, I actually do not have a strong view on it. I always thought real estate is a waste of money, personally, because it's you get invested into something and then you don't see the other side of the picture. So I'll just give you a small anecdote. Like I was doing this startup called ride sharing, P2P ride sharing, back in 2013, and there was a lot of hype around ride share as a service, car as a service. So why would you buy a car when you can just tap a button and the car will come to you, you can sit in it, you can go wherever you want to and then drop off. So ride sharing as a service, there was a lot of hype around it, and I thought, like, you don't use your own servers, right? You don't use your own compute, you will not use your own car. So I never learned how to drive, except when I started to date in 2020, 21. I thought I should learn to drive because it's really horrible if you're not bringing your own car, if you're just sitting in someone else's car, or taking taxis. So I learned how to drive, and when I learned how to drive, I was like, this is great. Like, if you know how to drive, it gives you so much freedom. You have an ownership of something. You can take it wherever you want to. If you want to carry your gear, if you want to carry your laptop, you can't leave it in a dicky of a taxi. You don't have to find a space where you can park your stuff. So driving is amazing and having car is amazing. Similarly with house, right? I never had a house, as in my own. My parents have, but I always like orange pilled. I thought house is a waste of time. It's just a massive waste of resources till I invested some money to buy a flat. And now that I have, I just feel it's mine. And there, I keep track of who all are buying around the space, who all are moving in. I have more of a personal relationship with the people who are staying around. So I think the more experiences you have, the more expansive your outlook towards things are. But there's no blanket uh, rule that some possessions is a bad thing, or not having things is a bad thing. Yeah, so I don't know, but if the loan is available for you to buy a house, and if you can have something of your own, I think it's not that bad an idea to have one.
Yeah, and to your question, if I may
Yeah,
add
correct.
something, I think
Anybody
it's
else has any views on that?
yeah. Am I audible?
Yeah, Keshav, you're audible.
Yeah, yeah. So I was just saying that I think the question you asked is a very good question, and the answer is personal to everyone. I think it's going to, you will get 10 answers if you go and ask 10 people, right? So as Saurabh said, there's no blanket to this. There's no right or wrong. It just really depends what your gut feeling is saying. But from purely investment perspective, if you're at a stage where you're probably buying your second or third house, then definitely buying Bitcoin is the better option. In fact, it is the only option that you should take. But yeah, let's say if you want to call a place home, that hey, this place is mine, I own this, then it holds a sort of sentimental value. Then you cannot look at the numbers while making that decision, right? I'm sure this resonates with a lot of people that are listening to this. But yeah, that's what I think.
So, Keshav, Amol, I'll try to answer it. So, there is a difference between a home and real estate. So, if you are
Yeah.
having a home, it's a different thing, and having real estate is a different thing. And to add, Keshav, so there is an objective answer. Yes, Bitcoin is better than everything else. But when it comes to staying in a house, making memories, that you can't compare to a monetary value.
Yeah, of course.
So yeah, so when you say there is this is there is no subjective in this. Yes, Bitcoin is better than everything else. If you don't have a
Yeah.
home, you are renting, you are only paying your Bitcoin in rent, your rent will go down. So yes, objectively having real estate is not a good choice. But if you want don't if personally when you don't want to go anywhere, you want to have one place where you want to, have a route over there, then only having a home matters. But saying
Yep.
that it is subjective, I feel is a bit not on point because of the aspects when it comes to monetary value of things.
Yeah, so I think just to summarize this, if you want to live in a place, uh, whether to buy Bitcoin or not is not even the question, because if you are planning to live in it, it's not an investment. And whether if the question is where to invest your money, then of course the answer is Bitcoin. But where to live, in that question, Bitcoin plays no part.
Yeah, because I said it because you can stay in a place even on a rent for 10, 20 years. Happy in Mumbai, people are doing it for hundreds of years. It's called a
Yeah.
pagadi system. So basically, you stay in a place, you give rent, but the place is not yours. So calling
Yeah.
home is also a little pedantic saying that it doesn't work, but yes, it does work. But if you're going just by calling someone a home and buying it to, just give a name to that place, yes, you can. But objectively, I feel Bitcoin is much better than everything. Amol, does it answer your
Yeah, of
question?
course.
No, no. Objectively, also buying your home is a better option. I will tell you why. Because when you buy your home, see, if you are staying on rent, every 2 years, 3 years, the landlord will say to you that you have to vacate because he does not want you to stay longer period of time because you will claim ownership after some period of time. So they want you to vacate after 2, 3 years. They want a new tenant. You will there will be 10, 20, 15% rise in the rental every year that you have to pay. But if you take a loan and buy property, your EMI won't go that much. It will be just the change as per the interest rate which goes up or down. But EMI will not be like 10% every year. Every 2, 3 years, when you have to change your house, you have to pay for shifting charges. You have to go, when you go to a new place, you take gas connection, you take all those utilities which you have to like subscribe like once again, like you have to take internet connection, you have to do all those things, you have to change your schooling of your kids. See, if your spouse
Hmm.
is working, then her traveling also, like it changes, everything changes. So it is not
Yeah.
just subjective, there are objective things in it that
Ca-
you have to consider.
Can I?
The
Can I?
first house which you buy, like it is that you have to buy for your family. And when we consider that real estate, uh, like Bitcoin is better option than real estate, then it is for investment purpose. Like you're buying second, third house for investment, then definitely Bitcoin is much better than real estate. So that
Can
distinction
I?
has to be made when we discuss these
Can I?
points.
Can I push back a
Yeah,
little
yeah,
on
yeah.
that?
Yes, yes.
Okay, so technically, you never own a house. The government owns the house, the land, whatever it is. You never own it. If something happens to the government, something happens, there is a civil war, there is anything happening, society, there is a societal disaster, that real estate doesn't belong to you. So that is one point. Second, there are now people are making only nine. So basically, the thing you're saying that you have to move every 2 or 3 years, not necessarily. If you have 9 months, so basically in Mumbai there are 9 months contracts and you have to renew it every year. So I have people who are staying in the same place for 10, 9, 8 years. They don't have to move. They just renew the contract. Rent, yes, it goes up, but if you are living on a Bitcoin standard, that rent goes down. So your rent goes up around by every 2 or 3 years, they increase the rent by around 10 or 15%. But an annual return of Bitcoin is around for 40% if you go by history. that also is mitigated if you don't care. If you want a family, if you want to stay in a place, you're telling me the schools and your schools and utilities has to change every year. I think that is a plus point because you want a diverse education for your kids. Yes, it matters to have stability, but in our kind of environment where the society is crumbling, do you really want to live in a society where people are subjected to only only one sort of propaganda where you have to live a certain way? Is that what you want? If you want, yes, it can work. But again, I'll say objectively also real estate is not. Oh, yes, having a home is important, but a shared rented property can also be a home, in my opinion. It's just that I'm not yes, stability in a family is important, but again, the ultimate ace asset right now, asset, whatever you want to call it, living on a standard, Bitcoin is the best right now. After 120 years, I don't know what will come next, but at least till now, I don't feel anything surpasses Bitcoin in any sense.
Okay, Apollo. Let's agree to disagree. We will continue this discussion in our meetup.
Amol, we
on
always
Monday.
agree to disagree.
So anybody has any other points in this, then they can carry forward. Yeah, thank you.
There's this book that I wanted to share. It's called The Psychology of Money. And the part of the book that I absolutely hated is the last section of the book. So it teaches everything about money, and the last chapter like sort of reverts back and is like, actually, you know what? It's all subjective. So I think when you read, and it's the bestseller. Like if you go in analytics, and it's the bestseller right now and for the couple of years on Amazon. But like if you read the book, it sort of hits you that like a lot of things are subjective, even though like returns in actual sense, nothing can beat Bitcoin. Like in terms of returns, absolutely
So,
returns. Like probably, I don't think anything can beat Bitcoin. But
so
yeah, the
Saurabh,
experience of
yeah,
having a house is subjective.
yeah, Saurabh, that book is really good. Actually, even from a monetary, only when you don't compare it to anything else, just as investment and money related book, it's very good. The only upper hand the Bitcoin has, it added the self sovereignty of it. Something which is not tangible. Or what makes us human? What do you want as humans? That book doesn't cover. And I feel that Bitcoin, so Bitcoin standard, or whatever related books there are, this is what sparks human, fire in the heart, that yeah, I was having money but I was missing something, and that missing thing was self sovereignty. So the book is really good, but if you want that why Bitcoin is important, that is where self sovereignty comes in.
True. I think we have Yash join in. Yash joins just for the fun part of the